Hey listeners, today we had on Ilja and Richard, the co-founders of Tensor. Tensor is a Solana native NFT platform, but Ilja and Richard saw the writing on the wall for the NFT market the past couple years and decided to launch a social meme coin trading app called Vector. We talk about the pivot to Vector, how to build a business in the meme coin space, and we get a lot of little tidbits on what Ilja and Richard have learned from building consumer crypto platforms along the way. There's a lot in this one. Let's dive in. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Ilja and Richard, the co-founders of Tensor. Guys, thanks for being here.
Hey, how's it going? Good to be here.
Thanks for having us.
So y'all were last on Lightspeed about a year and a half ago to talk about compressed NFTs, I believe. It was before I was working on the show, but in a bit of a sign of the times, you're now back, but partly to talk about a meme coin platform that you all have created called Vector. And we'll get into NFTs as well, of course. But I think I just want to start there because I joined Vector a few days ago, and it seems like a lot of my Twitter followers have been getting on it. It's a really sleek app. I've enjoyed using it. I'm not the biggest meme coin trader, but I've spent a couple bucks here and there, lost it all. So I just want to get maybe the inside story to start off with of why did you begin building Vector and sort of just the thesis behind it?
Yeah, it's funny because you mentioned compressed NFTs, and I guess the thesis behind Vector and the thesis behind compressed NFTs is actually exactly the same thesis. And the thesis is that there's just this explosion of assets on chain, and they're done on the chain that's really cheap, and they have to move around a lot faster than kind of what was thought of before. And the fees for doing all of that have to be a lot lower. And so it's interesting how like the product changed, but the thesis hasn't. But I guess the short story on Vector is about a year ago, we felt the NFT market was slowing down, and we just felt that the market wasn't large enough to support the kind of company we wanted to build. And we saw this wedge into building a mobile product for fungible assets. And because meme coins were kind of the flavor of the day, and we kept like talking to users a lot, we very quickly converged on not just a mobile product, but a mobile social product. Because, by definition, meme coins are an asset that's traded purely based on attention. And the most important signal when you're trading an asset like that is actually what do other people think? And that's how Vector became what it is today.
It's sort of like, in my experience, if you mixed Reddit, TikTok, and like Moonshot, like a more retail friendly trading platform. But I don't know, like when you're talking to investors or whatever, what's the kind of mental heuristic you use as far as what you would compare Vector to?
Yeah, we generally don't like to maybe anchor Vector to a specific existing app. Maybe the closest you would say is combining Twitter with Robinhood, where you get the social part of Twitter and almost this like following graph, this social network of people posting trades and sharing that with each other. And of course, Robinhood, trading is very seamless there. There's a lot of like gamification elements. It's very fun. It's very, it's very engaging to trade on Robinhood. And the UX, we sort of took a lot of lessons from Robinhood. I think they do it quite well. But I would say like it's really a category in its own. We're basically defining what social trading actually is, like what it should be. And we think that crypto and sort of this whole wave of attention assets, initially started with NFTs and now meme coins. We think this is perfect for the concept of social trading. It has been tried before. People in Web2 have tried it with stocks, but we don't think that's the right asset class. We think that these attention assets like meme coins and NFTs are the perfect vessel for proving out social trading. And we want to become the category king of this class, right? We don't think it's anything that exists before. We think it's going to be very different. We don't even think the current state of Vector is close to the end state. We're going to continue iterating, but it's going to be very different from what you've seen before.
And it's been like quite successful, right? Like at the time, I did a piece on Vector a few days ago, and I think the stat was that it's already 10x'd the annualized revenue of Tensor's NFT marketplace. Like where are those figures right now?
Yeah, obviously the volumes that Vector does correlate strongly with meme coin volume or just maybe more speculative trading volume in general. So it tracks pretty well with the market. So, when meme coin volumes are high, for example, when Trump launched his token and then subsequently Melania, our volumes went through the roof. We were doing about $25 million a day or $9 billion annualized. And, we take 1% fees from that. Right now it's hovering between probably like $6 to $10 million on a low day, maybe 10 to 15 on a good day. And hopefully, I think basically the cat's out the bag. I think given that the president of the United States, of all people, launched a meme coin and basically said, hey, it's okay for us to, for people to just launch a meme coin, create essentially this memetic thing that people can speculate on. And because the president of the United States did it, like, they're not going to come after you. David Sachs, the crypto Cesar, basically said meme coins are collectibles. There's no longer a question of, I'm launching an unregistered security and therefore, I'm going to get into a bunch of legal trouble. I think meme coins have become, normalized now. And I think we'll see more of these, more folks launching them as either, part of their personality or perhaps part of some go-to-market for something that they're working on. And so we expect these volumes to go up in the next couple of months and to really hit its peak, its stride, later on this year. And we're basically in this interesting position where we just went public 3 months ago. We're starting to basically win over most of the crypto native market, which is the ideal customer profile for us. And now we can start looking at other layers of other layers of this sort of market that we're going after. So the core is crypto native users, but we want to expand Vector to reach people that are trading crypto only on centralized exchanges. And eventually people who have never touched crypto, who are maybe trading stocks on Robinhood, but want to get into meme coins because it's this fun way to trade something that doesn't require you to have, 4 years of research experience working at a traditional financial firm, right? You don't need to know a ton about DCFs or financial models or digging into the management of a company to be able to speculate on attention assets. Your edge as retail is what's trendy, what's happening on TikTok, and you can basically try to make money off of that information versus competing with all of these big financial firms that just collect a ton of data and have way more edge over you in the traditional markets.
Yeah, and as you said, Richard, this went public a few months ago. I started seeing it, but it still is invite only, where you need an invite code to download the app. And I don't know, you're not very miserly with these invite codes, but it still is like an interesting go-to-market strategy. So I'm curious why you chose to go the invite only route as opposed to, hey, anyone who wants to can sign up.
Yeah, it goes back to what kind of product do we think we're building here? For utility products, or maybe another way to call them is single player products, where the use you get out of it depends purely on your usage. Invite codes make no sense. You just fully open the product, get people in. But actually, for multiplayer product or networked products, invite codes are a pretty important go-to-market tool, because what you're doing there is you're trying to grow the social graph in a very dense fashion. So what you really want is, instead of having 1,000 people on the network that don't know each other, you have 100 guys, but they all know each other because they've been inviting each other to the network. And that way, when, Jack, you join the product, you're like, oh, well, I know Ilja and Richard, so I'm going to follow them. And whatever trades they post, at least that's there's a much higher level of trust there compared to like 5 random guys you've never heard of. So that's really the main reason we're using this go-to-market. There's a few other reasons that come with it that are nice. So for example, when you expand the product gradually, it just gives you a bit more time to make your infrastructure more robust, so servers don't just like fall over and everybody has a bad experience. But that's really the main reason.
One thing that I find compelling about Vector is, I think when you follow the Solana space, which is very hip and trendy right now, you see a lot of copycat ideas. So Pump.Fund becomes this hugely successful app, and then you saw, 10 different attempts to create better meme coin launch pads, because there are like real issues with Pump Fund. It's not the greatest for like liquidity reasons and things like that. There's a lot of money just locked in coins that'll never go anywhere. But none of the copycats were able to capture Pump.fund's place because it has the first mover advantage. People like it, etc. So I guess I want to ask you, like, first of all, why did you decide to go in the social trading direction, which isn't like currently big? And also, obviously, there have been past attempts to do something like social trading. Why is Vector going to succeed where others may have not?
Yep. So there's two parts to that, right? The first one is why, and then like why do we choose this, and how do we succeed? How do we win as Vector? So I think the why is, I guess to us, it's pretty obvious. So I think it's never right to basically do the same thing and not have some unique insight into why you're doing something different from what exists. And I think like you mentioned, we saw that with all the pump fund copycats that just decided to take the pump fund concept and copy and paste it to, some L2 chain base, or some like bringing it to ETH-L1 or bringing it to, Telegram. And that never works because the fundamental behavior that pump fund enabled was anyone can launch a token and anyone can and that will bootstrap enough liquidity for it to be fun for a bunch of retail takers to come and trade this thing. Once someone proves that out, like differentiating on the chain doesn't matter at all, right? That's not the behavior that's interesting to people. It's not the chain itself. It's the bootstrapping of liquidity for these long tail of tokens that are being launched. And then so for social trading, it's differentiated in that we're not just building a cookie cutter trading app. We're not just building the utility of trading on your mobile phone. That being said, that was the initial hypothesis we went with when we started Vector, was that we are going to build an awesome mobile trading experience that combines a wallet like Phantom with a trading discovery app like DexScreener. That was actually the initial problem that we wanted to solve. When we built the thing 9 months ago and we tested it internally, as well as with like 50 other users, we realized that this wasn't enough to get people to switch over from Phantom to Vector. And so we went back to the drawing board and we asked ourselves, hey, what are some unique insights that we're learning right now based on these guys' activity? And one thing we kept coming back to was the fact that anytime they would trade a token, either through Vector or through other apps that they were using, they would always want to share their trades with their friends. Or they won't want to brag about the game porn and the loss porn and post their massive P&L cards on Twitter. And so we said, hey, what if we could capture this in this mobile native form factor, where you don't have to switch between 3 different apps. You don't have to switch between X, Phantom, maybe even some other trading app. And you can actually just share this stuff and get push notifications directly to your phone whenever someone makes a trade. So that's why we leaned heavily into social trading, because we felt like it was a unique insight that no one else had. And we could do it much better than everyone else. The reason why we'll win is we think we have the right asset class, like I mentioned earlier, to prove out this idea of social trading. I think previous attempts have failed, specifically in Web 2, because it wasn't differentiated enough in the right way that people cared. Like, yes, you could share your, trade on Tesla and Apple, but you could also do that on Wall Street Bets. And it's hard to overcome the network effects of Wall Street Bets and try to create a new app that packages that into a nice form factor. But the thing with social trading with attention assets is there is a lot of alpha when it comes to keeping track of how many people are trading this thing. And we can create essentially like summary stats of, okay, there's 100 people who are trading this token and sharing about it on Vector. This is alpha for you. But that's not alpha for a stock like Tesla or Apple, because most of the price action there is dominated by fundamental analysis and pension plans, allocating some of their funds to Apple and Tesla. And so we think we got the right asset class, we got the right form factor, it's mobile first, and we have the distribution. And so that's why we'll win in this category.
Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. What about the issue of just fragmentation? I think something that trader types are maybe frustrated by these days is in a world where tens of thousands of Solana tokens launch every day, it feels like the window for a meme coin to trade is like 48 hours. Whereas it used to be, oh, Dogecoin is this years long thing that goes up and down and we all follow it together. And there's almost a sense of you're like alone on the dance floor when you're trading some of these meme coins because no one else is talking about them. Whereas you mentioned Wall Street Bets, Richard, when people were trading GameStop, it was these masses of people that sort of had a community organically around this stock. But when there's 30,000 stocks every day trying to vie for attention, like how do you actually create that sense of community? I wonder if Vector is sort of a response to that.
Vector is not about community building, to be clear. Vector is a game. And the number one thing you want from a game is high frequency. The higher the frequency, the more people play. And so actually what you described, which is a coin these days might be popular for 48 hours and die, that's a feature, not a bug. That's what makes Vector tick. If you only had Dogecoin and 5 other coins, Vector would be pretty boring because what are you looking at? The same chart 50 times over? That's actually exactly the unlock that enables this type of product.
That's interesting. Okay, I hadn't thought. Yeah, we just had a roundup come out today where we talked about meme coins can maybe be thought of like gaming because they're, not something you should do if you're seriously trying to invest your savings or whatever. But that's kind of what these platforms have come to be. Okay, that's the social side. I guess as far as the tech goes, I'm just curious to hear a little bit about some of the technical considerations that went into Vector and maybe particularly how you deal with slippage and MEV and sandwiching, given that you're dealing with so many micro cap assets. Like in my time using Vector, I've gotten an alert that's like, warning, like you're getting a bad price. And I hit buy anyway because I was just messing around. But how do you deal with that? How do you keep users from feeling like they're getting poor prices? And what are the technical considerations there?
Yep. It's actually quite deep that you have to go. I think that's maybe one of the edges we have. We've basically been doing this for the NFT marketplace for the past, I guess, like 2.5 years before working on Vector. And we just know like all the tricks in the book. For one, like how do you land transactions when there's a bit of congestion? And how do you protect against MEV? So specifically on Solana, maybe I'll take a step back. So the reason why meme coins are especially prone to MEV is because these assets are so highly volatile. You have to set slippage, which is how much like tolerance in the change in price that you're willing to accept once the transaction lands. And you want to set this to be pretty high for meme coins because it's quite a volatile asset. So for example, let's say on your front end, you see that the meme coin is $1, but by the time your transaction executes, it's like 80 cents. But you still want to buy for let's say it's $1.20. You still want to buy for $1.20 because you know it's going to go up 200%. And so you might set your slippage to 20% or 25% just to account for that tolerance. But the issue is with AMM specifically, there's this phenomenon called sandwiching, which is literally there are validators that bundle these transactions together. And they'll basically like arbitrage you by buying up a bunch of tokens before your transaction lands, bringing the price just up to like $1.20 or $1.25, which is your max slippage amount. Selling, like you end up buying those tokens from the pool, and then they would sell those tokens back into the pool and effectively netting how much size you actually did. Or I guess like the percentage of price that the price that you moved based on your transaction. And so like people are essentially getting screwed over by these validators that are running these sandwiching strategies. And so how you solve this is there are services that will whitelist good validators who don't sandwich users. And there's also Jito, who has a set of their own validators that also aren't sandwiching folks. And so we use both Jito plus a couple of other services like Temporal and Bloxroute, who all have a whitelist of validators that are not sandwiching their users. And this is our way to protect our users from getting screwed over.
I guess I want to just zoom out for a second, because Tensor obviously began in 2022, I believe, as a Solana native NFT marketplace. And it's now sort of, I don't know if pivoting is the right term, but extending into the meme coin market. And Ilya, we did an interview asynchronously for a piece I did, and you basically said, look, like, we know that meme coins are a 100x bigger market than NFTs. So I'll just ask you straight up, are NFTs cooked? Is that market segment over with?
I think NFTs are going to come back, but not in the form factor that they existed before. Specifically, I think in the past, NFTs have really had one form factor, which was this very speculative, luxury item that people kind of fought for, and like, whoever had the best punk or the best ape had the most clout on Twitter. That's always going to exist, but that market is going to be pretty limited in size. NFTs, what we're seeing right now, by the way, like the Tensor Foundation is stewarding all the protocols, and it's actually issuing a lot of grants to teams that are building on top of those protocols. And what we're seeing right now is that people are building all kinds of stuff on top of NFTs. It's like, a ticketing platform, an art platform, a speculative platform, this platform, that platform. It's kind of in the name. All of these things are very different. And so, 10 years from now, NFTs are going to be everywhere, but we're just not going to think about them. The same way you no longer think about like .coms, like that. There's just not a concept anymore. You just like go to the internet and you just open a website. That's all it is. The challenge for us and really any product team is, when you have an asset class this diverse, it's very hard to build a product that is consistent and simple, which means it's very hard to build a large business. So if we wanted to stay a lifestyle shop and have like 5 developers and a website making, $10 to $20 million a year, we could do that. We just chose not to, because we want to build a bigger business. And meme coins, or even just attention assets more generally in fungible format, they're a much larger marketplace because they trade a lot more volume. They're a lot more liquid. There's a lot more interest in them. It's just much easier to build a consistent, simple product that a lot of people are going to use that moves a lot more money around.
Yeah, I was reading an essay yesterday about stablecoins, and basically how stablecoins themselves cannot be a product. Stablecoins have to be attached to a different kind of business model. And that's why you see Circle sort of pivoting some of the things it's doing. As rates get cut, you can't just sit on your treasury and invest in T-bills, and that's not a sustainable business. I'm curious if NFTs could go the same way, where like the non-fungible token is a piece of technology that has uses for things like ticketing or real estate or in real life experiences or something like that, but it can't be the business itself, if that makes sense. It has to have like some kind of business attached to it. Do you see something like that happening?
Yeah, there's basically this idea of a smiling curve when it comes to like value capture. And I mean, I don't subscribe to this too deeply, because I think you can build a big business anywhere. But essentially, you have like, if you think of like the stack of like, let's say software, you have the products that are at the app layer, which is at the very, that has the closest touch to the user. And then you have all the way at the bottom, the platform, which is the stuff that you build on top of. So that's like a Solana. The app layer is like a vector or a phantom. And in the middle, you have everything in between. Like you have API services, you have data providers, you have maybe even wallet providers, like embedded wallet providers. And the theory is the app layer and the platforms accrue most of the value, and you don't want to be stuck in between. Because the issue with being stuck in between is at any point in time, the app layer can swap you out or verticalize and basically own all the middle part. Or you want to be at the platform where you have so many people integrating on top of you, and you've built this network effect and developer tooling and apps that depend on you. So this is like sort of the EVM model, right? Where there's so much built on top of EVM. They have such a strong network effect that it's hard for, Solana has proved otherwise, but it's very hard to disrupt that network effect of people building on top of your platform. And so I think NFTs, if you just build a business by providing NFT services, like NFT data, and even NFT, I guess middleware, it's not going to be a very profitable business. And I think we kind of saw that with the NFT marketplace, where we knew like less and less people, if NFTs were going to be a big thing, fewer and fewer people would be using our trading interface, and they'll be using the interface is specific to the NFT use case. For example, ticketing, they'll be using the ticketing interface. Or if they're doing like Pokemon cards, they'll probably want to use an interface that's optimized for Pokemon cards. We knew that eventually we'll be sort of disintermediated from the user, and therefore we need to move towards being a platform. And that's essentially what we did with the marketplace, where we said, hey, we don't want to be the only front end available going forward. We've built all of these smart contracts that took a lot of time, that had a bunch of auditors go through. It's basically battle tested, bulletproof. Come build on top of us, and we'll be the platform, right? We don't want to become the data provider. We don't want to become, an NFT infrastructure provider, because we know that will be swapped out eventually. And we want to be the base layer, which is the NFT marketplace, or I should say the NFT protocols.
As you look at the big names in the NFT space, the Magic Edens, the OpenSeas, do you think it's going to just become table stakes to launch some kind of Memecoin platform? I know Magic Eden has gone, at least you can now swap tokens in their app, but do you think everyone's going to move the token route as opposed to the NFT route?
I mean, I think a lot of some of the big NFT companies are moving towards meme coins. That being said, we're not too worried about this. Well, the one reason, going back to why we chose social trading, the thing with social and like adding a social layer on top of meme coins and trading in general is, if we get this right, then we go back to sort of this standard network effect mode. Not standard, but like this tried and true network effect mode, where it's very hard for an incoming competitor to come in and try to disrupt it. Because bootstrapping this network is really difficult, like we're going through that process right now, in order to get people that are producing calls, or I guess we call them callers, that's really difficult, because you have to convince them like, hey, we have enough users for you to make calls and for you to get distribution. And then we're also like building up the other side, which is the demand side, where people want to follow these callers. Once you reach critical mass, which I think we're getting there, like we have about 20,000 daily active users now. That's like a large part of crypto Twitter, and we're growing, basically doubling every 2 weeks. It's going to be hard for someone who decides to come in late into the trend and say, hey, we're going to build a meme coin platform and we're going to try to take away your users. It just doesn't matter. Yeah, but I do think that these NFT companies are looking into, hey, how do we capture this new asset class that all of my existing users are trading right now? And that's basically the decision we also made.
What is the secret that or the pathway you've discovered to building a consumer platform that works? Because I think in crypto there's a big desire for more social and usable apps, but these things are really, really hard. Like we just did an episode the other day where Mert was talking about, look, most of these things are going to fail just by the nature of building on the consumer level. So as people who built Tensor and now have built Vector, like what do you see as the through line in those that made them work out?
I think building consumer companies is both an art and a science. I mean, building any company is an art and a science, but I think with consumer in particular, I feel intuition has an overly large role to play. A lot of the decisions we make are very intuition based, where we try to read between the lines what customers are actually saying. You can't really take the words that a customer tells you, especially in consumers and and take them at face value. They might say, what's a recent example? For example, a lot of traders are asking for automated trading. They come to you and they say, hey, can I just have this button that copy trades somebody? If you take that at face value, you're going to build a really bad product, because that's not actually what they're asking for. What they're actually asking for is a button that makes them money. And you had to be very clear-headed that that button is impossible to ship. You just can't. And if you ship a button that does anything automatically, you're basically issuing the promise without ever being able to deliver on it. And so you're setting yourself up for failure, and you're setting the customer up for disappointment. And so I think building consumer companies is just being very introspective and kind of like really understanding people, like what is this person actually asking for? And then asking yourself the question of like, can we even deliver that? And sometimes the answer is yes, sometimes the answer is no. And then if you can't deliver them the automated button, okay, well, what's the next best thing? Well, you can give them a feed of interesting people to follow. You can give them interesting signals. You can give them notifications. There's a lot of stuff you can give them, but you can't issue the false promise of I'm going to make you money. So that's really what consumer companies come down to. You just have to be very attuned with the market and people and like really, really listen and read between the lines.
Yeah, I want to go a little deeper there because I think that raises an interesting point. And it makes me think of after the Trump meme coin launched, one of the question was, is this good or bad for crypto? And one of the cons people raised is that a lot of people bought this a little too late and ended up losing a lot of money. They basically round tripped the Trump coin. And losing money doesn't make you feel friendly towards the crypto space. So it's negative for crypto's reputation for that reason. Running something like Vector, like you said, Ilya, you can't build a button that makes people money. And I would guess over a long time horizon, most people lose money trading meme coins. So how do you build a product knowing that users might get wrecked, lose money, and still retain users so that they don't rage quit and delete the app?
I think this is the hardest problem that crypto faces, which is it's so profit focused. A lot of products are, the power of crypto, ultimately the USP of crypto is like payment rails or value rails. And a lot of, the number one use case for that is speculation, trading, whatever you call it. And not everyone can make money. Otherwise, there would be just infinite money in the world, which doesn't happen. And I think that's the reason why crypto consumer apps, beyond utility, hasn't really found PMF where they can retain people for the long term because they've been so profit focused. One thing that's different about Vector and why we're leaning so heavily into social is you can almost think of social as value that's being created based on interactions between people. For example, any social media app, when you post a picture and you get a bunch of engagement, in theory, that's creating value. And the value is in the form of dopamine. You get a kick out of, your friends liking your photo, commenting, saying congratulations on, whatever you're doing in that Instagram photo. And I think the same effect applies here, where if you're sharing trades, some of the times you make money, some of the times you lose money. It's very possible that you might lose a bit of money in the long term. That's just math. But you're getting entertainment out of it. You're getting the social utility out of it. And I think that's why we think that Vector will retain much better than a lot of these other trading apps, is because there is actually value being created outside of just trying to make money.
Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. Speaking of money and tokens, the kind of announcement that was made recently, and the reason I covered Tensor recently, is that Vector adopted the Tensor token, and half of the profits are now going to the Tensor Treasury. So, I don't know, expand on that decision, and why is it kind of significant? Why should people that are engaged with Tensor care?
Basically, I think when we got into crypto, it was really important for us to build a company that is aligned with the core ethos of crypto, which is decentralization and community ownership. And that's why from like day one, we were pretty bullish to have our own token and like have the community involved. And obviously that token became TNSR for the marketplace. Now, when we decided to pivot out of the marketplace, there was this open question of, okay, do we launch a second token? Or do we basically find a way to accrue value back to the existing token? And we just felt it was the right thing to do to go back to the existing token holders and take care of them rather than launch second, third, fourth token. Basically, the way to think about this is like Binance and BNB or Jupiter and Jupe, those are basically product empires at this point, where you have like 5, 6 products or all working together and accruing value back to the same token. That's kind of the future we foresee for Tensor and the ecosystem of products we're going to build, where all these products are intertwined and they accrue value back to the same token. It makes everything a lot simpler. There's just one instrument. And it makes everybody feel good rather than launching 5 tokens with all of them with a chart going to 0. And so, yeah, the big announcement was that Vector, exactly the same as Tensor, is sending 50% of revenue back to the Treasury controlled by TNSR token holders. That makes the TNSR Treasury really interesting because at this point, this is the only treasury in crypto that is an index on all kinds of long tail assets, including NFTs and fungible assets like memes. I think like the form factor of, what people trade in the long tail is always going to change, but there's always going to be the long tail. And I would argue that the long tail is actually what makes crypto exciting. That's the stuff you can't do in TradFi. And so the fact that there's this treasury now out there that is basically an index on all kinds of long tail assets, I think is really awesome for crypto. And it just makes it very unique. Like no other treasury like that.
What makes you say that it's an index for long tail assets? Can you expand on that?
Yeah, basically what I mean by that is, let's say the NFT market and or the meme coin market 100x's from now. That would mean that there's 100x more revenue flowing into that treasury controlled by token holders. And what that means is that if you're a capital allocator coming into the space and you don't quite know what NFT to buy, you don't quite know what meme coin to buy, but you want to have exposure to this idea of the long tail of assets, TNSR is basically the only token you would buy.
Mm-hmm. And the Tensor Foundation is distinct from you guys as the Tensor Labs, but what kinds of things could the Tensor Treasury do? Like, is it just kind of, it goes into this box and it never leaves, or will that treasury actually be spent on things?
Yep. So this is all governed by the foundation's bylaws. The foundation has basically outlined this process for what token holders can currently vote on when it comes to governance. And that's outlined on their docs page. But in general, governance can change. And I think that process is also outlined in their docs. I don't quite remember the specifics. But in theory, like eventually token holder governance might decide, hey, what if we use some of this treasury to pay for grants to get people to build on top of the protocols, or even like using that treasury to potentially even like buy back TNSR. But that's all in the hands of the token holders. They would have to go through the right governance proposals as outlined by the bylaws.
TNSR's token, the chart is been mostly down since it launched, I believe, last April or something along those lines. And obviously that's tends to be the case with airdropped tokens because there's maybe not as much incentive to buy and hold. And I think the Vector revenue is an attempt to bring some sort of positive tailwinds to that. But I don't know. How do you think about native tokens and keeping them from seeing kind of brutal price action? And I don't know, are there examples out there of teams that you're sort of inspired by as you think of what to do with TNSR headed into the future?
I think the team we're most inspired by is probably Jupiter. I think they understand the value of their token and bringing and like routing all the value from their ecosystem back to that. I think Binance also has done a phenomenal job of inserting inserting BNB in every part of the product and accruing value back to it. Basically, like if you think about Binance, whenever you use their product, BNB is everywhere. It's advertised everywhere. It's used everywhere. It's giving you discounts. It's giving you special, claim privileges. It's opening the launch pad. It's doing like a million things. And that's exactly how TNSR is going to work in Vector, Tensor, and all the other products, where it's just going to give you so much more than you can get out of the ecosystem of products that, of course, if you're an avid user, you're going to hold it and you're going to use it. And so that's one of the two parts of the equation. And then the second part of the equation is saying, okay, well, all the value that this ecosystem of products creates should be routed back to that token. And the token holders can decide to do with the treasury what they feel is best. And maybe that's investing in future projects, maybe that's seeding like teams that work around it, maybe that's buyback and burn. That's completely up to them.
Just in general, you two founded a company and then went through this kind of huge product pivot and are moving in a new direction. So just looking back over that founder journey and the story of Tensor, what were the lessons learned, or what would you do differently if you were talking to yourself when you were starting out again?
Yeah, the biggest thing to watch out for is really market size. I think when you're choosing a market to operate in, you really want to be thinking about how big this market can become. It's very easy to put in a lot of work and basically end up with a product that's phenomenal, that customers love, but where the market size just isn't big enough. What makes all of this really hard and why building a company is basically black art is how do you know the market size of something 10 years out? Like, is NFTs going to be gigantic or is it going to be tiny? And that's where like your hunch really comes in as a founder. There's no math equation that is going to tell you that. But to give other founders a little bit of comfort out there, yeah, you may not know all the answers ahead of time, but as long as you're staying honest with yourself, you have your ear close to the ground, and you basically adjust your judgment based on new information, you are able to pivot. And you can take the company in a different direction if you think you made a mistake. Like we admitted a year ago that we made a mistake and we took the company in a different direction. And we'll do it 5 times again if we have to. Like we don't care. So I think that's the good news for founders, is that in the end of the day, it is in your control. Listen to the market, adjust your judgment, and go where you want to go. But to me, that's probably the biggest lesson of all of this. Really think about market size early.
But what's the standard there, I guess? Because I think I look at some companies in crypto and it feels like they're launching a new product every 3 weeks based on the flavor du jour on crypto Twitter. And so, hey, we have an AI agent. Hey, we have a prediction market based on what everyone's talking about that month. So how do you balance, I guess, knowing when you were wrong and you need to pivot in a different direction versus saying, hey, this is just a fad in crypto and I'm going to stay convicted on the initial vision for this company?
I think that's where there is no science to creating successful startups. And again, it's very dependent on basically the founding team and how marginally better they are at making decisions and making the right judgment calls. There's really no science to it, and it's also very context specific. I can't just give a blanket statement like, yes, we pivoted successfully into Vector, but I can't give a blanket statement or a rule of thumb saying like, hey, these are the reasons why you should pivot. Like it's just not going to work for every case, and there will be exceptions. I think what maybe a principle that startups in general can learn from is, hey, am I being intellectually honest? And is there actually a long-term plan for this startup to become massively successful because I have this unique insight into some secular trend that is going to persist for 5, 10, 20, 30 years? You could argue that AI is indeed one of those, like, I mean, if you look deeply enough and you understand the potential of AI, for example, you know that that's going to be massive. Like, yes, it might seem frothy right now, but if you take a step back, it is going to fundamentally change the world. Same thing with crypto. If, yes, you could get caught up in the headlines of like crypto is a scam, Trump launched a token, everyone's losing their money. But if you take a step back, you know that this secular trend of permissionless, verifiable finance is going to be the end state. AI agents will need it. AI agents are rational, and they would never trust a human to intermediate their financial transactions. And you know, in the end state, if AGI actually becomes a thing, they're going to be using crypto as the rails. And so if you identify these long-term inevitabilities, these secular trends that will have to happen based on logic, I think you can set yourself up to ride that trend and build a product somewhere within that space.
Yeah, and while you're zoomed out there, let me ask, like, recently the Solana marketing apparatus has been talking a lot about internet capital markets. This idea that all assets will come to be on chain and Solana is going to be the place where they're indexed and traded. So I guess another two-parter, apologies, but A, what do you think of the internet capital markets kind of tagline? And B, where do you see Tensor/Vector fitting into that end game for Solana?
I mean, I think it's a no-brainer to anybody in the industry that the future of capital markets is online. Like, it's just so obvious. Like, why would you ever go back to TradFi? It's sort of like going back to sending letters by post rather than shooting somebody an email. It's like so blindingly obvious. I would be surprised like anybody, even outside of crypto, would look at this and say, of course, this is not the future. You know, what's interesting for us is recently the foundation rebranded away from NFTs and saying, hey, we're just really here to bring internet finance to every consumer and become that gateway through which consumers experience internet finance, because we are huge believers in that thesis. I know you had Kyle Samani on to talk about it. Like, all the points you make are basically correct, I think. And I think 10 years from now, it will be unthinkable to, you know, our kids that somebody would ever send somebody money that is completely untraceable on some COBOL infrastructure-based system that took 3 days to travel from North America to Europe because it's apparently traveling by sea in a container or something. I don't know. Like, that's how long my wire takes these days. It's like so obvious what the future is. And, you know, if we're right about our thesis, then Vector is going to be the way a billion people experience these types of assets.
One question that I think comes out of the Samani episode we did and just the internet capital markets thesis is you have crypto native assets like NFTs and meme coins, and then you have, I don't know, bonds, gold, like Treasury bills. I guess that exists, but these more traditional assets that are not yet on crypto rails in a real way. So are you all opinionated on how that happens, being people that are more on the meme coin side of things? Like, do traditional non-crypto assets need to come on chain for that internet capital markets vision to be realized?
I don't think so. I think it will be a large market. These RWAs and tokenizing traditional financial assets from the existing world, I think it will be a big market. I think there will be massive companies built on top of this. The main benefit there is, again, like just making things more accessible. I think it's basically impossible. I mean, I don't even know how to buy bonds right now. Like, I have an Interactive Broker account. I have no idea how to buy bonds if I wanted to, speculate on interest rates. And furthermore, if you're not based in, the Western world, you have no way to easily access the Western markets. So I think RWAs will be massive in that way in terms of like expanding the market size of people that can access the these traditional financial instruments. But I would sort of take this may not be contrarian outside of crypto, but I would say the contrarian take is that eventually, because this is really the new financial system, I'm not going to put a date. I mean, maybe I would say maybe like 30, 40, 50 years in the future, there will be a greater amount of assets in terms of dollar value that are minted natively than exists in the traditional world. Obviously, predicting far into the future is difficult, but it just makes so much sense that as the world changes, as AI infiltrates our life, as we sort of like slowly move over from traditional financial rails to crypto rails, people will just naturally start creating assets on chain. People will form capital on chain. And how do you tie, on chain capital, on chain representation of ownership, for example, to derivatives or financial instruments around that? It could be bonds. You probably want to mint it natively as well. And I think that would just overwhelmingly increase in market share of the amount of financial assets on chain versus off chain or tokenized.
Okay, final question for you all. Vector is out there now. You've set up the kind of token revenue agreement. What's next? What are you working on? Are you going to be just working on improving Vector? Are there new apps that you want to launch this year? What can we look for from Tensor going down the line?
Yeah, I think basically Vector right now has probably reached about 10% of its potential. The only thing that has really happened is we've proven at a very high level that this idea of people sharing a trade with their friends is something they want to do. This is, if you want an analogy, and to quote Kyle, reasoning by analogy leads to actually wrong conclusions. And I think he's right. But if you want an analogy, this is kind of the Facebook before the seven friends moment, when they figured out that getting people to add 7 friends makes them stay on the platform. I think the big task we have for the coming years is to now take this high level idea and convert it into a real business model for traders on the platform, where ideally in 2 years from now, you as a trader starting in the space wanting to build a follower can't imagine doing it on any other platform other than Vector. And you're like, of course I'm going to go on Vector. Of course I'm going to start my group there. Of course I'm going to teach my followers how to trade there. Of course I'm going to share my alpha there. And the way you get there is like 15 different monetization models that are worth trying, 15 different ways of discovering traders on the app, 15 different ways of traders sharing alpha within the app. Like, is it a single trade? Is it a cycle of trades? Is it long form? Is it short form? Is it there's just an infinite design space to be explored. That's the monumental task we have with this app going forward. And look, I'll raise my hand and I'll say, I don't know if we'll figure it out. That's the part of being a founder. You kind of have a hunch and you're betting on yourself. But at the end of the day, the proof is going to be in the pudding 5-10 years from now.
Absolutely. Well, it'll be fun to see if you do all figure it out. Ilja, Richard, thank you so much for coming on the show. It's been really fun getting to talk to you guys.
Thanks for having us.
Thanks for having us. It was a lot of fun.
Absolutely. Take care.